By Holden Lewis. NerdWallet. The first half of 2022 was a catastrophe for home buyers. Skyrocketing mortgage rates and home prices made homeownership unaffordable for millions of renters. At the year's midpoint, the real estate landscape remains steeply tilted against home buyers. But the terrain may become less hostile to buyers in months to come. Here's how we got here and what could happen across the housing market in the second half of 2022. Mortgage rates climbed faster in the first half of 2022 than any time since 1981. The 30-year fixed-rate mortgage averaged 3.06% in December and 5.66% in June. Mortgages went up in response to rising prices and the Federal Reserve's policy of trying to control inflation by raising interest rates. Meanwhile, home prices shot into the stratosphere. The median price of a resold home was $407,600 in May, a 14.8% increase over 12 months earlier, according to the National Association of Realtors. In the second half of the year, forecasters expect the median existing home price to drop but stay within striking distance of $400,000. The Fed is expected to keep hiking the rates, exerting continuous upward pressure on mortgage rates. Sharply higher mortgage rates and home prices have created an affordability crisis. We'll look at the decline in affordability from two angles. First, how much you can borrow for a given monthly payment. Let's say you can afford $1,500 a month in principal and interest on a 30-year mortgage. At the beginning of the year, at an interest rate of 3.25%, you could borrow about $344,700. Mid-year, at an interest rate of 5.75%, you could borrow $257,000. That's an $87,700 less in borrowing capacity. Secondly, the change in mortgage payments for a typical home,